Good morning, everybody. Thank you for joining us for Business First Wednesday. We are with, again, Gina Mangiamelli, hope I didn't butcher that, and Dorothy Daniels. They're going to be talking about an introduction to the accounting function. So I hope you're super excited. We are recording this. If you need to step out early, you can find it on our YouTube channel and watch it again or watch the rest of it. But I'm going to pass it on over to Gina, the fabulous Gina. Thank you for joining us and take it away.
Thank you, Jennifer. So happy to be here. Thank you, everyone, for joining us today on a topic that I think is very important. It's one of the areas that, as a certified business advisor, I see as probably the biggest deficiency in most of my clients is understanding the accounting function and terminology related to it that helps them to understand how to interpret their business and whether they're profitable or not. So as we get started, I'd like to move this forward. There we go. Great. So I am with the SUNY Brockport Small Business Development Center. For those of you who do not know about the SBDC, we are a free and confidential resource for entrepreneurs and small business owners, whether you're starting up, existing, or ready to prepare to sell your business. We can help you at all stages. We've been around since 1984, so we're not new to the entrepreneurial world. We are a robust team. We have 23 centers in New York State. The SUNY Brockport Center is only one of those 23, but there is an SBDC in every state in the country. There's about 1,057 SBDCs nationwide. In New York State, we have 213 SBDC advisors that can help, which means that when you come to our center, you don't just have the one advisor you're working with. We have access to all of our advisors. So if there's need for collaboration or some help or research, we can certainly do that to maximize the services we provide for you. On the right of the screen, you're going to see the names of the other SBDC centers, and we each cover all of the counties in New York State. So if you're interested in resources provided by the SBDC, you can make an appointment, and this slide will also be at the end, so you don't need to write down the website now, but just to let you know that we do have an online registration with our statewide SBDC site, and we can usually accommodate within a couple of days that registration and get back to you. So today's topic is one that is near and dear to my heart because my college degree is in accounting, and I love the function of accounting, but most people I run into kind of look like this guy on the screen where we don't know what to think about it. We've never had any training. I don't know the basics, but I want to run a business. So why do I need accounting anyway? So let me set the pace and the tone for what we want to accomplish today, because accounting is a very big field. It's like saying, you know, I'm a doctor in medicine. Well, what kind of a doctor? You know, so just like in medicine, where you can have a cardiologist, a general practitioner, a podiatrist, accounting has different functions as well. So today we're going to touch on the accounting process. We're going to touch on the basics and then give you some next steps of things that we feel that you should be engaging in to better your education and understand the numbers in your business better. But before we get started, to set the tone, I thought it would be fun to start with a story. So this is a story about Marvin the frog, and it goes like this. Once upon a time, there was a toad named Marvin. Marvin owned a business as a garden toad, working every day and keeping the gardens free from beetles and pesky bugs that, left unattended, would destroy these beautiful gardens. Every day, Marvin would walk to the riverbank from his home, where the river swan would take Marvin across the river to the gardens that he cared for. The river swan helped Marvin in this way because Marvin did not want to learn how to swim. One day, Marvin came to the riverbank, but the river swan was not there to help him. He waited and he waited, but the time was wasting and Marvin needed to get to work. So Marvin decided that he would try to leap and jump from one side of the river to the other. He backed up and he took a strong running leap, but only made it halfway across to the river before plunging into the river water. Try as he might, he never made it to the other side. The gardens went left unattended, and eventually the gardens died. So the moral of this story, although not the focus of the work you do in your business, you need to learn necessary skills that are going to help you accomplish that work that you like to do. So that was just to set the pace and the tone to kind of get us thinking about that. One thing we don't want to learn about, which in most cases is accounting. So the question is, what is accounting? I'm sure you all have some idea in your mind. It's the thing the CPA does. It's the thing my tax accountant does, but we haven't really taken a look at what this function really represents. So the way to think about accounting is that it's like this big tree with lots of branches. A branch in audit, okay? Managerial accounting is what you would do for your business, all right? You're going to manage the business using accounting process. There's financial accounting, there's tax accounting, bookkeeping, and forensic accounting. Now, forensic accounting has been the biggest surge of area function that we've seen over the last 10 years. And forensic accounting pertains specifically to seeking out fraud. They use it in court cases, and it's a very detailed, very robust function. So that is something most people aren't familiar with, is forensic accounting. But as a business owner, even a small business owner, so whether you're making candles or you're running a manufacturing plant that's going to make straws or parts or whatever, it doesn't matter the size of the business. There is a reason why every business needs the accounting function. First and foremost, we need the accounting function so we are in compliance with regulations that are set by our local, state, and federal government. We also need it as an effective business tool to make decisions. All right. So by not reviewing the numbers every month and realizing what, whether you made money, did you lose money, you have to understand how to make decisions based on what's happening in the business. Looking over a couple of years of your financial reports, you can determine some strategic role in running your business. Do I want to expand? Do we need to close a certain area because it's not functioning right? All right. So looking at this as a tool to be able to help you with strategic planning is essential. It's very important also for companies to have financial stability. When you run a company, and I don't care how small it is, I don't care if you're repairing sewing machines in a basement or you're creating epitax wafers with a nuclear reactor, you need to have some mechanism that defines the financial position and posture of your business, and if you have financial stability. These numbers also help identify growth and help you figure out what's going to happen in the future. So, businesses have rules. Accounting helps us comply with those rules. And so it's really important that we know the numbers. All right. The devil is in the details and the numbers never lie. Okay. So let's get started. The accounting process is a process where we identify transactions, we record transactions, we then summarize all this so that we can analyze it, so that we can produce financial statements. And there are financial statements that you should be trying to look at or have developed at least quarterly at minimum, but ideally every month. So how do these transactions occur? It all starts right here when you decide you're going to open your business, be open for business, and you sell your first item or service. So when I say your business sells service or stuffs, that's products. Services would be intangible things like being an educator or home inspector, tutoring, detailing cars. You could be a company that owns a bunch of trucks that suck the grease pits of restaurants as a service, okay? Whether it's a service as an intangible item or whether you're selling products like handmade soaps or wreaths or manufactured goods, lumber, plumbing supplies, anything that is actually tangible. That process is the same for that as well. So you have intangible services, you have tangible products, but no matter who your consumer is, once you sell to the consumer and exchange funds, so I have a necklace for sale, I'm selling it to you, and in exchange, you're giving me $10. So now there's a transaction. We have to do something with that $10. Typically, we're going to not put it in our pocket. We're going to put it in the bank, which is debit to cash. We're going to physically put it in the bank, and we're going to record it, and we're going to record the sale. All right. And then that cycle continues. So that whole process continues for a period of time, which we call the accounting period, and the accounting function will cycle as well. And we'll have sales and transactions, and it all gets wrapped together. So the accounting cycle continues through an accounting period. So let's take a look and just define what that accounting cycle is. So I described accounting as where we identify, record, summarize, analyze, and report. Well, that whole function where we have a transaction, we record it through the month, we've identified it, categorized it, put it into QuickBooks, we've spit out reports, that's the cycle. And we do that cycle over and over again during an accounting period. So typically a business is going to record, identify, record, and summarize, and do that cycle within an accounting period, which typically is going to be from the first of the month to the last day of the month. But smaller entrepreneurs that are just, that are perhaps selling not a huge volume, they don't have a big staff, but they're creating things and they're selling them at craft fairs and the public market and maybe online and things like that. Maybe you don't need to look at it every month. You could look at it in a 3-month period. So that would be maybe from the 1st of January to the 31st of March. Although reconciling cash and making sure that you're solvent is always a monthly kind of thing that you do. But the accounting period as a function of accounting can be defined in these ways, either monthly, quarterly, or annually. When a sole proprietor, a small business sole owner, goes to their tax accountant, they're going to look at the entire year and create a Schedule C based on that accounting period of January 1st to December 31st. So we're clear about what an accounting cycle is and what is the accounting period that is using the accounting cycle. Okay, so once those transactions continue, as we process selling and restoring raw materials to make more things, or as we continue our services, once we get to the end of the month or the end of the quarter or the end of the year, we want to look at those summaries or those financial reports that we get at the end so that we can determine what it is that we've done. What happened in our business? That's the question we're trying to answer. What happened in the business? Did we have a lot of sales? Did we have reduced expense? Were we profitable or did we lose money? So the reports that we like to look at in this way to figure out what happened in our business using the accounting function, we're going to look at possibly 5 reports. 2 of them are on the screen. We have the balance sheet, we have the income statement, but in addition to that, there are typically 5 reports that the accounting function can produce. Additionally, the statement of cash flow, which kind of details the source of money coming in and the use of that money going out, the ins and the outs. An accounts payable aging to figure out who we owe money to, and more importantly, an accounts receivable aging that says who still owes us money. Now, for retailers doing cash exchanges and transactions, typically won't have accounts receivable, but you may have accounts payable like a utility bill and things of that sort. So what I want to do is define for you the importance of these these reports, but mainly focus on the balance sheet and the income statement. And I'm going to start with an explanation of the of the balance sheet here. Sorry, sensors. There we go. And then Dorothy's going to do an explanation. Well, actually, Dorothy's going to do the balance sheet. I'm doing the income statement. But before we get into that, I want to give you an image to think about when we're thinking about these reports. So the balance sheet is like a snapshot of what happened within that accounting period. So if you only operated for 1 month and then everything stopped, you would have a snapshot of where you stand. What are your assets, which are things that you own, like cash and inventory, vehicles and equipment? And who do you owe money to, which are liabilities? If I subtract my liabilities from my assets, it's what's left over in my pocket. So we think of the balance sheet as like a snapshot of what happened in your business. The income statement is a little bit more detailed because that's almost like a motion picture, because that's a revolving, sales coming in, expenses going out. It's in motion and it's always going. So even when the month ends and the property controller or your bookkeeper or your CPA is putting your numbers together, while he's doing that for the last month, you're still operating, you're still functioning. Okay. So we're going to take a look at a little deeper dive of how the balance sheet gets read and is interpreted, and about the income statement. So right now, I'd like to introduce Dorothy Daniels, who is a COVID advisor in our center, to have her talk about how to think about the balance sheet and to give you a deeper explanation of that. Are you with us, Dorothy?
I am. Can you hear me okay?
Yeah, take it away.
I had a little bit of technical issues earlier, so hopefully that won't interrupt our conversation. I also want to point out that on top of being a SBDC COVID advisor, I also have my own bookkeeping business, and I have about 30 years experience in doing books for small businesses. So I like to explain the balance sheet in a way of a little story with this little hobo boy here. If you could picture that you have to get out of town within the next 24 hours, and you have to take everything with you because maybe you're entering into the witness protection program or you're on the lam, but you're not coming back. So you want to get together all the cash that you have and put it in a bag and take it with you to get out of town. So where would you start with that? Bank accounts, you'd go to the bank and you'd clean out all your bank accounts. So that would be a line item. This is the assets. I'm sorry if I didn't specify that. We're creating the list of assets, which is all the money you can gather to take with you on the lam. So you would go to the bank and you drain your bank accounts. You would go to maybe the car, you'd sell your car. You'd cash out your 401k. Anything that you can come up with that you would gather cash that you would take with you. Now, you might have personal belongings. You might have a nice diamond ring that you would pawn, and you would categorize all of your personal belongings in one line item. You would not list each and every one of your personal items. And you would probably go around to everybody that owes you money. That would be your accounts receivable, and collect all your cash from them. Maybe sell your house. What would that be worth? And put all this cash that you have in a bag, and that becomes your total assets. However, before you can actually leave town, you have to go and you have to pay everybody that you owe money to. So maybe you go to the car dealership and pay off your car loan. You would go to the bank and pay off your mortgage, and you would list all of these items that you would have to go around and pay off as your liabilities. So now what you have is a bag of cash that's all yours, which is your equity. Once you've cashed out everything that you have that's worth anything, and then you've paid off all your debts, you're left with your equity, and you can leave town knowing you have everything that you own with you. So that is basically the nuts and bolts of a balance sheet. It is to find out your worth, financially speaking, of course. And usually the way I kind of think of it, and I know it's backwards from everything accounting, but if I take the assets and minus the liabilities, that equals equity, which is the same formula of assets equals liabilities plus equity. But it's just a little easier to wrap my mind around the fact that take everything I own, subtract everything I owe, and then that's my bottom line and my worth. Now, the balance sheet in and of itself, one balance sheet, it's not really that helpful. It's when you do them every month and you can compare last month, what's my bottom line last month of my financial worth? And at the end of next month, run a balance sheet. What's my financial worth at the end of month 2? And ideally, it's going to be greater as you make profit and you pay off debt. That's the ideal situation every month, every quarter, every year, when you compare it to the previous accounting period, that the equity is what increases. That tells you you're going in the right direction.
Great.
I don't know if it was specified that we would accept questions throughout the course of this
Yes.
webinar as opposed to waiting till the end.
Yep,
So
we're
if anybody
taking
has any
questions.
questions, please let us know.
Great. That was excellent, Dorothy. Thank you. So just to summarize some accounting terms that right now you should know is that we've talked about the accounting cycle, how that cycle operates within the accounting period, assets being things that you own that can be liquidated, converted to cash, accounting reports like the balance sheet. We identified cash accounts on the balance sheet. And then the function of how we record these things is done with credits and debits. We talked about some equity, which is what's left over after the assets pay off all the liabilities. So liabilities are things that you owe. So a bank loan, a car loan, even things. So one other liability that people may not think of is a prepaid service. So if someone hires you to give piano lessons, let's say, to their son, but they pay you in advance for 1 year, that payment actually is cash in the bank, but it's a prepaid liability because you haven't delivered those services yet. So in the accounting function, some liabilities get recognized as we deplete them and as we deliver service. So liabilities can also be things, not just what you owe, let's say to a bank or, loan payments and stuff, but it can also be things that you owe in the terms of service or products to who your customer is. So all of that we said are through the transactions. So accounting cycle, accounting period, assets, balance sheet, cash accounts, credit, debit, equity, liabilities, and transactions. These are the first of the accounting terms that we've introduced you to. Now, getting to the next piece of the financial reporting is the income statement. And quite honestly, these are not reports just for business. This is a really good way to keep track of your own finances and also to know your own position with your personal balance sheet. If you go to the bank for a loan, they will be asking for a personal financial statement. So understanding these terms and what they represent is essential not only to your business, but it's also essential to your personal life as well. So the income statement is like that motion picture camera, like I said, where we have income coming in because we sold goods and services. There was a cost involved perhaps, which then gave us what was left over. So the income statement is going to have revenue and expenses that we're going to recognize to determine whether or not there was a net profit before we consider any kind of taxes or interest that might be due. So gross revenue can also be called income. That's what comes in the door in the way of cash. And when I say cash and all cash equivalents. So whether they pay with credit card, greenback cash bills, or whether they use PayPal or whatever, all of that represents cash that will end up in your bank account. Okay.
Hey, Gina, may I interrupt you?
Yep.
You have a question. Do you have an easy template to use that is free for basic monthly record keeping?
Good question. There are many. Actually, what I recommend is if you go to Staples or Office Max or one of those stationery supply stores, they will have a manual book month by month where you can keep track of that. And I do recommend that because they're spiral bound usually. They have instructions. They give you definition, a couple of pages of definitions on how to categorize. So a standard manual bookkeeping notebook is available at these stores. And right, you do have to pay for it. Could you find something online? We probably could find something online, but I'm going to actually have something here that you might be able to use, which I'll get to in a minute. So good question.
Two more
whether-
questions too. Would you recommend QuickBooks Online? And then is cryptocurrency considered the same as cash liquid?
I don't know about cryptocurrency. That's sort of an unsettled type of currency in the accounting field right now. It's going to deal with tangible cash accounts. Cryptocurrency is evolving, so we might see some legislation or some kind of decisions made about that. But I think that in this regard, with standard traditional GAAP accounting, we're looking at legitimate cash accounts that would accept credit cards and perhaps PayPal and things like that. So I don't know the answer actually to that cryptocurrency one. What was the first part of that question, Jen?
It says, would you recommend QuickBooks Online?
So I have to tell you that QuickBooks is an extraordinary software package. It isn't free, and but it is the most common. QuickBooks in the cloud is great because no matter where you are, if you're transient and need to work out of a hotel room or in different locations, having QuickBooks in the cloud where you can constantly get to it is better than perhaps having it on your computer at home, because you'd have to be there to access it. Dorothy, do you want to comment on that since you're our QuickBooks expert?
Yeah, I would love to comment, and this is my opinion. I am a bigger fan of QuickBooks on the desktop than I am on the online. The online offers, as Gina mentioned, easy access from anywhere. Me personally, what I've done in the past is I have the desktop on my actual desktop in my office, and I can access it from anywhere by using a remote app. So I can access my home computer from anywhere with my laptop. It's really a case-by-case basis. It's what works best for your individual needs. As far as ease to use, desktop by far, in my opinion, is the better program. It's just not as accessible as the online. So it really is case by case and what your needs are as to which one to do. And I believe the desktop is now going at the end of this month to a subscription. So it used to be favorable because you could buy it. It was a one and done expense. You download it and you use it. However, now or in a month's time, it is going to be an annual subscription that you're going to have to purchase.
Okay.
And a follow-up question, if I may. If you are starting an e-commerce business, would each paid order be considered a liability until you ship the product and the customer receives the package?
Now we're getting into the FOB scenario, freight on board, meaning who's going to take responsibility for it when it leaves your dock or when it gets delivered. So that's typically when it leaves your dock is when the sale and the transaction is complete. Usually there might be some insurance on the package, but basically in your policy to your customer, you would state that, we consider it delivered when it is shipped. And you send them a tracking number, but they would be responsible for following up with that. But that, freight on board scenario is another accounting function that, you determine in your policy. But for most e-commerce businesses that I've worked with, when it is shipped, that transaction is recognized as cash and is not a liability, but is a genuine transaction for sale and revenue and income.
Another one, if I may. What is the remote app that allows someone to access their QB desktop from another computer?
Dorothy?
I personally use LogMeIn. I'm sure there's other apps out there that are just as easy to use, but myself, I use LogMeIn.
Could you put that in the chat and send it to everybody? That way they'll know what it looks like. That's great. Any others, Jen?
That is it for now.
Good. Guys, great questions. Means you're thinking. That's excellent. I'm really happy to hear these questions. So in the income statement, as I said, we're going to record revenue as income. But when we sell something, all right, now not so much for service businesses, although there can be a cost of service. If I have Christmas ornaments that I'm selling and I bought them from a wholesaler, they may have cost me 50 cents, but I'm selling them for $1. When I sell them for $1, I'm recording $1 in gross revenue. And then I'm demonstrating a cost of goods of 50 cents that has to be deducted from that revenue because I have to recover what I spent to bring that product in. So my gross revenue minus my cost of goods sold is what leaves me with gross profit. And that gross profit is not the bottom line, it is the profit before we deduct expense. So when we consider what that gross profit is, and in this scenario that I'm showing on the slide here, is that we did $1,000 in the month, that I had a cost of goods of $300, and my gross profit is $700, but I still have to pay for rent. I still have to pay my utilities. I still have marketing expense through Facebook or something I have to pay. I have one employee and I need to pay those payroll taxes. I journeyed off to a customer and I had some travel expense with that. And I have business insurance that I had to pay for. So these expenses had to come out of my gross profit. These are the things that we recover the cost on from our sale, which makes it so important that we talk about pricing when you start your business. This is probably the most touchy kind of thing because people think they want it cheap and I want to be competitive, but you have to remember that when you're pricing your product so that you can generate that revenue, it has to be enough money, not just to cover the cost of the ornament or the material or to make the soaps or whatever you're selling. It has to be enough to cover other expenses in the operation of your business. These are operating expenses that also have to come out of the revenue. And pricing is, it's both art and function. So you don't want to charge too much, but you don't want to charge too little. You need to be competitive. So when I work with clients, we do a lot of work on structuring how pricing is done. And, you know, that involves a lot of things like who my customer is, where they are. You know, let's put it this way. If I'm going to purchase products at Macy's, their pricing is based on who the demographics are for that type of a store versus if I go to the dollar store, it's a different combination of people. So pricing really involves a lot of things. So making sure that when you're planning your pricing of what you're going to sell, that gross revenue not only has to be enough to cover your cost of goods, but you have operating expenses that need to be included in that. Okay, so this is the income statement: revenue, cost of goods, and expenses that in the end, when all is said and done, we end up with a net profit before we pay our taxes or any other deductions that have to come out.
There are
So
two
this is-
questions.
Yep.
Sorry, I'm sorry. Could you provide some examples of the distinction between cost of goods or services sold and expenses for a service-based business? That's
Yep.
the first one.
That's a really good question because a service-based business might not necessarily have a cost of service. So if I'm doing piano lessons and I drive myself to my student's house, all right, I'm going to have a gas or mileage expense, but there isn't really a cost of service. It could be that if I provide the piano books for the student, all right, that in order to teach him, he needs books. So maybe I charge $25 an hour for the service. And then at one point I had to deduct the cost of the book. And then that was gross profit. And then my mileage expense would be an operating expense. Okay, so the distinction is between those things that are related directly to operations versus the delivery of the service. Now, if I'm an internet-based service, so if I'm Spectrum, okay, Spectrum's cost of service, they're buying from a producer of those services, so they might have a cost of service. The way you distinguish between them is you ask the question, is it an operating expense? Or is it directly, is it really something I had to pay for that is directly related to the sale? So service can be a little bit different than a clear distinction if I'm, like the example I gave with the ornaments. Perhaps you do have some service. So for example, a direct cost of service could be that I couldn't make the lesson. I charged $25 for the lesson, but I couldn't be there. So I hired another piano teacher for $10 to give that lesson. That $10 would be a cost of service to be delivered versus paying that substitute teacher mileage for going to the house. One is an operating expense, one is directly related to the actual service delivered. Does that do it?
One more question. If you have a home-based business, should you include the rent, utilities, etc. in the expenses, even though you don't have a dedicated office or production studio?
Okay, so the Internal Revenue Service has specific compliance requirements for this question. And if you have a dedicated space, so the IRS publication would give you those parameters. You have to have a dedicated space. It must only be, and in some cases you have to have a separate door or direct access. So the best way to define that is to read the IRS publication related to that, which actually, if you go to irs.gov and in the search bar put just rent or home space, you'll get publications that come up. And that's a question that we can probe into if you were one of our clients, and we could advise on that. But there's a lot of resources that talk specifically to that. Compliance with Internal Revenue Code is very important for a home-based business because they want to be sure, like you can't just use the dining room table and deduct rent. You have to have some dedicated space. Now, are you using, part of your house for business? Well, yeah, if you are, then set up a dedicated space. I have a friend of mine who's a quilter. It's her full-time business. She has one of those huge long arm quilting stitching machines, and her basement, she's actually built a workshop. So she can deduct a portion of that on her taxes because she has dedicated space. But if you don't have dedicated space, then I would ask you to please review the IRS requirements for a home-based business according to your NAICS or SIC code and what the IRS allows for that. And more importantly, perhaps talk with a tax consultant that is an expert that can give you a more direct for your situation. Okay. Anything else, Jen?
Yep. First, a couple thank yous and excellent. And a question for a home-based business, could the business own the home?
Yes. And then a portion of, so if you're paying a mortgage and you want to deduct some of that space, you can use your principal mortgage payments as space dedicated to that. So yeah, owning your home, owning an apartment, whatever the expense is, if you're dedicating it to business, then there's parameters in the IRS code to be able to allow a deduction for that.
Follow-up says, I mean, the business owns the home, not the business owner.
Yeah, if the business owns the home, and I've seen this where couples have actually incorporated their families so that they don't own anything, but everything's owned by the business, then that mortgage payment and everything related to its maintenance can legitimately be deducted as where the business is. So that, again, I would ask you to, for that situation, to talk about, with a tax consultant. But if the because a corporation can pretty much do anything a person can do. They can own property, they can own anything. And that asset, if there's a liability, so if I'm ABC Corporation and I own the house and there's a corresponding mortgage, you can deduct the expense of that mortgage interest, and you can have a corresponding liability with that. But I've seen that done with a couple of clients where they actually took every asset that they owned and incorporated their family as a business. I mean, they had a legitimate business, but instead of buying a building, they, like farmers, okay? That's a really great suggestion or example there, is that farmers have lots of property, they have land, they have cattle, they have, all their livestock. Those are assets within the farming organization, which is typically a corporation or a limited liability company. So yeah, there's a lot of accounting that can be done for deductions, and it's a little bit different when it's ownership, because you're making a payment from the bank account to pay down the principal. So that's reducing cash and reducing the principal amount of the actual mortgage maybe on the property, but you get to deduct 100% of the interest that you paid on that property.
Thank you.
More questions, or can I go forward now?
You can go forward, Ms.
Okay,
Gianna.
these are great questions, guys. Keep them coming. I'm very excited to hear that you're thinking about these things. So this is really good dialogue. So what I have on the screen right now is a sheet that we use. It's used for projecting income, but you could also use it as a compilation of the income that you had and the expenses that are there. So this is one manual sheet that you can use to keep track of your monthly income and cost of goods and all of your operating expenses. This manual sheet is available in a document that we created here at the SBDC. It's called the Blueprint to Success. And when you become a client of the SBDC, this is a publication that we have in digital format that we give to you as part of the resources that we have here at the SBDC. So this is one manual document that you could use to draw the summation of what your expenses and income were for a particular month. So what are some of the potential expenses that you could have in addition to what I've talked about? Well, you've got advertising and marketing, digital communications. You might be a contractor that puts in foundations. And so you don't own the equipment, but you actually rent it as you need it. That equipment rental is a legitimate operating expense. You may have some employees, and those employees get wages, all right, their salaries. There's going to be a payroll tax that is associated with those employees. Interest expense that we just talked about, where if you owned property for the business and you're paying that mortgage, all the interest expense is a deductible operating expense. You're going to have insurance, maybe product liability insurance, property insurance, flood insurance, any type of insurance would be an expense. And even though I'm calling it a general category of expense insurance, You might want to separate it out with sub accounts so that you know how much you're paying for flood insurance or property insurance or product liability insurance or malpractice insurance. Okay, if you're a social worker, medical doctor, different types of insurances are applied here. It could be medical insurance for your employees. Okay, could be workman's compensation insurance. So that category is big depending on the situation you have for your business. Internet services, Wi-Fi, streaming services, all operating expenses. Professional services like your CPA accountant, bookkeeper, legal advisor, attorney, a financial planner. If you're paying for these services and it's directly related to the business, then you can have these as operating deductions. Professional development. So let's say that you're a life coach, and every year for twice a year, you get training to help keep up with your professional development requirements. And so if you have to travel and get some training and attend conferences, those professional development expenses are deductible as an operating expense. Of course, if you're renting and it's for the business. So if I'm in retail space and I'm paying $1,500 a month for rent, that rent is an operating expense. Repairs and maintenance. So if you're renting property and you're in a triple net lease, that means you're paying the rent, you're paying the taxes, and you're paying for the maintenance and repair of the building. That's what triple net is. So those repairs that you pay for, the maintenance expenses, maybe have an Isaac Heating come in and do the furnace and they exchange the filters, but something broke down in the bathroom and you had to repair it. These are all operating expenses that you can deduct for your business as long as they are related to business. What you can't do is fix something at home that was broken and charge it to the business. Okay, it has to be related to your business and the function and operation of your business. Things like telephone communication, cell phones for the employees or yourself, deductible expense. Travel expenses, travel and lodging is a typical category for targeting expenses. So that can include mileage. It can, now with the mileage, you can either deduct the IRS amount for each mile that you travel, or you can collect the receipts for gas purchases. Either way, you pick one or the other, but it can all go under travel. Air travel, you got to fly to Miami to go talk to a wholesaler. You attended a conference, so maybe the conference expense was $1,500 to attend, but your travel was $1,000 for the hotel and the airfare. You would put that under travel and lodging. Utilities include your heat, your light, your water, perhaps sewer expense, and waste management, getting rid of refuge that you have. So, and it can be other things like restaurants. They have grease extraction where a company comes and you pay them to suck out the grease pit of a restaurant and dispose of it. When I worked in the hospitality industry, I was a property controller for hotels. One of our expenses was to have a guy come in and clean the hoses at the bar, so that while you're filling up, different glasses with what's on tap, well, those things have to be cleaned regularly so that they don't build up mold or bacteria. So at the hotel, we used to pay a guy about $125 every 2 weeks to come in and clean those hoses. So depending on your business and what's relevant in terms of expenses, operating expenses, it could vary. There isn't any one. There are some standard 8. There's like standard 8 categories that a CPA looks at, but the subcategory of things that are related to your business, you are going to have those expenses detailed for yourself. And when you set up QuickBooks or Sage or any of the other accounting software that we talked about last month, you're going to define that expense and you're going to write that definition of that expense so that you don't start mixing up one expense for the other. And this is something that's very important, which I haven't talked about, is the chart of accounts, what we call things, so that there's consistency. So if you say that insurance is going to be property insurance, and then you define workman's compensation insurance. You know, there's ways within a software package to have a category and then subcategories so that you can really watch and define what the expense is and how much you're spending on that. So keep in mind that as you look at your business and you start to think about what are the operating expenses that I'm going to have, you want to be sure that you set those up. Another one is dues and subscriptions. All right, so let's say you join a chamber of commerce, you join a merchant association, you join the Canal Side Trailblazers networking group. They have a fee. So those dues and subscriptions are an operating expense. You can deduct that as well, but you have to define it. You have to understand what goes in that. Probably one of the things I've done in the past for clients is recategorizing expenses so that they're in the right place. I have payroll taxes up there, but one thing that does not belong on your expenses for operating is sales tax. That is not an expense. You're collecting it for the state. It's going to stay on the balance sheet because you're just collecting it, and then you have to send it to the state. It's not something that you paid that came out of your cash account. I don't want to confuse you, but keep in mind that when you collect that sales tax, someone's giving it to you, a customer's giving it to you. You get to keep the income. So if you sell an ornament for $1, you can put $1 in income, but that 7 cents that you collected is a liability to the state of New York for sales tax. So sales tax does not go on your operating statement. Okay. And then any other thing that pertains to your particular industry. One of the documents that I frequently request from our research network is something called the RMA Annual Studies. And this is a collection of information by industry. So the NAICS code, and if you're not familiar with that, it's the North American Industrial Classification Code. It is a defined bucket for the industry that you're in. So if I'm in the hospitality industry as a hotel, I'm going to have a specific code, and I can use that code to get a document from RMA Annual Studies that will tell me what are the normal expenses, what can I define for my industry. Okay, and there's a lot of other reports that we can get. When I'm putting together financial statements or projections for the bank for a client, I like to pull these kind of reports to know what is the norm, so I can make decent assumptions about what the operating expenses might be for a particular industry. If I do a projection for campgrounds, it's going to be very different than if I do one for a manufacturing plant. So understanding the industry, getting data for that industry is important. And I would also at this point say, if you're going to get a bookkeeper or a CPA, ask them, how familiar are you with my industry? So that's an important piece because that learning curve could cause some misinterpretation. All right. Any questions at this point before we move on?
Yep, we have 3 questions. The first is, if you use a vehicle for your business, does car insurance count as a deduction as well?
If the car itself, now, if the car itself is owned by the business, then you can deduct interest and insurance and all that. However, if you're deducting by mileage and you're taking 55 cents a mile, the reason it's that amount of money per mile is because it's going to include gas, oil, fuel, insurance, pretty much what it costs to operate that. So in most cases, taking the mileage deduction really is inclusive and is more a higher deduction typically than if you break it all down. But could insurance be a part of that? I would say, again, because we're going to split hairs with when are you using it for personal, when are you using it for business, and what percentage is that? So if we could justify a percentage of business use and then equate that. So if I'm spending $100 a year on insurance and 60% of the time I'm using it for business and I'm deducting gas receipts versus mileage, then you could probably justify an insurance deduction for the vehicle on that. But most entrepreneurs are using the mileage deduction. But in all cases, again, I would yield to the IRS code and a tax accountant that could help navigate that question.
Thank you. And next question. How would business-related dining and entertainment be categorized? For example, taking a client to a game, to dinner, or for drinks?
Yep, all very important. Again, it has to be business related and that you did, being on the golf course and transacting business is probably the most common. But I do think as we take a look at, let me just see if it's on here. Meals, it's categorized as meals and entertainment. That is the actual category. All right, and you can break that down. So meals and entertainment is a common, one of the common deductions that we see, and it is scrutinized pretty well. So if you want to get your bills tickets and charge it off to the business, then there has to be a corresponding definition. And who are you entertaining? Who, if you've got tickets, oh my goodness, excuse me. All right, you can spank me now. I forgot to put my phone on vibrate. I apologize. So sorry. So if you're buying bills tickets and you've got 8 games that you can go to and you've got a targeted customer for that and you have a specific goal, I will tell you that the IRS in audits has been very scrupulous about how they allow these deductions. So with meals and entertainment, you want to be sure that you have the receipts. Right on the back of that ticket, staple it to a big piece of paper and write an explanation of who you took out, why you took them out, how much it was, and the result perhaps. So I'm taking out my wholesaler. We're discussing new pricing for the coming year, and all the explanation that you can. So meals and entertainment is a legitimate deduction. Over document, because the Internal Revenue Service is quite picky about this particular one.
Thank you. Are debit and credit card processing fees allowed to be written off?
Yes, these are legitimate deductions. Whatever the expense is, and in a lot of cases, if you're online and you're using Shopify or any type of clearinghouse that's going to process that payment for you, that is a legitimate operating deduction.
How and where do you get data about an industry?
So there's a couple of places. I know that the library downtown has lots of resources. We have a research network in Albany where we have staffed marketing research experts, and I usually put my request in for them. But one, you want to know what is the industry code that you're dealing in. So that would be the first thing. Know your NAICS code and perhaps your SIC code, which is the Standard Industrial Classification Code. We can help you determine that, what that is. You can also just Google NAICS code for hairdresser, beauty salon. And there's a lot of sites that come up with that. Once you have that industry code, there's a couple of things. You can get RMA studies. There's industry publications. Most importantly, I would say reach out to the associations that are closely affiliated with your industry. So if it's restaurants, then the American Restaurant Association, become a member, deductible dues and expenses, dues and subscriptions, and get their information and their data every month to keep you abreast of your industry. And they typically will have resources within the association that can help you with that industry data.
Thank you, Gina. That's it for right now.
Great. So this is the summation of income statement with revenue, cost of goods, gross profit, and potential expenses. Okay. All right. So let's add some more accounting terms that you need to know. You need to understand cost of goods sold, and I won't get into the formula on how we actually determine this, but know that it's something that exists and has to be subtracted from your gross revenue, so that you have an appropriate amount of gross profit showing that'll cover expenses. EBIT, so I talked about net earnings, net profit before earnings, before taxes and interest. So, that once you have net profit, then there's potentially additional expenses that has to come out. For example, your entrepreneurship taxes. All right, will come out of that. Expenses are operating expenses. Gross revenue is income. Gross profit is revenue minus cost. And your net profit is what that total is after you subtract all of your expenses from your gross profit. Okay, so we've talked about the balance sheet. We've talked about the income statement. We've reviewed different expenditures that your business can have, and we've reviewed, terms. So just to review where we are right now, we're looking at how we defined accounting, the importance of understanding the numbers. We've described different types of accounting. We talked about financial, audit, tax, managerial, and forensic. We've explained the reasons why you need to understand accounting and read the numbers every month. We've introduced accounting terms to you. We've demonstrated the accounting cycle within the accounting period, and we've explained the balance sheet and the income statement. So, and operating expenses. So at this point, you've got sort of a 15,000-foot view of the accounting function, things that are involved in it, what it is that you need to be aware of and use to read the numbers in your business to know what happened during the accounting period, okay? But how do those numbers actually, where do you start with recording these things and getting it done? And I'm going to ask my expert bookkeeper and QuickBooks expert, Dorothy Daniels, to pick it up from here to talk about how the numbers get there.
Can I butt in for one moment with two questions on your
Yeah.
topic, Gina? First one, what do you Google to research an industry?
I would probably, so let's say the industry is biofuel, and I would research first, what are some of the particulars? So for example, I have a client that takes coffee chaff and used coffee grounds, and he upcycles them into a biofuel for pellet stoves, okay? So in researching that particular industry, I started with the category biofuel and pellet stoves to see what would come up. But I would recommend that if you have some legitimate research requirements, I would really encourage you to use the Business Insight Center at the Rochester Library, because they have a lot of resources and a lot of librarians that can help you with that kind of a question. And also the SBDC, we can reach out to our research network for that as well. And one really classic example of that, where I had no clue. I had a client that came in that wanted to do Pacific whitetail shrimp farming. I don't even fish, so I don't know. I didn't even know where to begin. So where we began was a request to the research network. And I said, I've got a client who's doing Pacific whitetail shrimp farming. The research network librarians went to work to find out some things in the industry, and they kind of surmised, they made some assumptions. The first assumption was that someone would do this perhaps to create shrimp to sell to restaurants. So they looked there, they looked at agricultural programs. And what they came back to me with was that we don't have a lot of data on this, but we did discover that the Ohio Small Business Development Center, in conjunction with the Ohio State Department of Agriculture, worked together on creating this kind of a program. So they sent me to Ohio, not physically, but I called Ohio SBDC, another benefit of being a part of SBDC network. And I was able to talk with the advisor, who then connected me with the person who was working this program, who then connected me with a guy in the Hudson Valley that was actually doing this. So I was able over time to accumulate some information and data to help my client get started with his continued research on how to set up in a great big warehouse, a ton of pools in a saline solution that creates shrimp that he can sell for $18 a pound. So it's a process. It's not necessarily a single way to do it, but I generally begin with the category and try to drill it down to a specific.
Thank you. And finally, I have, how are employee perks deducted? For example, coffee, bagels, or food?
Supplies. I'd categorize it as office supplies.
Thank you. That's all I've got.
Good. All right, so Dorothy's going to talk about reconciliation and categorizing, beginning with your bank statement. Dorothy. Did we lose Dorothy?
Okay, can you hear me?
We can hear you.
Hello?
Hello.
Well, you've lost me a couple times.
There you
Can you hear
are.
me
We
okay?
can see you.
Yeah. Well, if I disappear, I'm sorry. I've been booted a few times. My internet's unstable and I very much apologize for this. So I'll talk kind of fast. If I was going to start your bookkeeping process, if you don't have a bookkeeping system in place and you want to get your numbers in order, the first thing, the very first thing, the most important thing is to reconcile your accounts, your bank accounts and your credit cards accounts specifically. When I take on a new client, that is the first thing I do. Why? Because it tells me what's true. It's accurate, it's true, and I can depend on it. It tells me the amounts that are going in and out of my bank account. And since this is a fairly beginner's webinar, I'm not going to get too lost in the complications that can happen, but you have your bank statement and you balance it. So however you're keeping your books, whether it's on paper, on QuickBooks, you want to make sure that you have the correct numbers going in and out of your bank account. And this is going to be your business account. So this is going to determine what your business expenses are. Provided, I'm making the assumption that everything that you do for business expenses is done through your business account. It's a conversation for another day if you're paying business expenses out of your personal account or vice versa. So for simplicity, everything you spend on your business account or on your business is done through your business bank account or your credit card accounts. So once you have those numbers that you know are correct, the numbers going in and the numbers going out, you kind of want to weed out the things that aren't true. This is why I said checking accounts may have outstanding checks. So when you're balancing your bank account, if you wrote a check to Plumber Jim, and when you're balancing your account, the bank doesn't show that Plumber Jim cashed that check, that's an outstanding check. You may need a little bit of research. If you wrote that check 6 months ago, you're going to want to call Plumber Jim and find out why you didn't cash the check. But if it was written a week ago, keep your eye on it and make sure it gets cashed maybe the next time you balance your account. But for all intent and purposes, the numbers going in and out of your bank account are the real thing. That's what happened. If it's on your bank statement, it really happened. If it's not on your bank statement, sans outstanding checks, then it didn't happen. Credit cards, if it's not up to date today, there is no outstanding credit card charges. There may be a day or two lead time. If you might go to the store today and it might not show up on your credit card account until Friday. So you'll learn that over time as to how your accounts come in timing wise. But if when you're balancing your credit card account, there's a credit card charge in your record keeping from February, it didn't happen. So delete it. You want your accounts to have everything that the bank says actually happened. So once you have the reconciliation completed, I don't know if there's the next slide that somebody can move for me.
Working on it.
So you have your balanced bank account. Now you have your ins and your outs. Now the bank statement in your reconciled bank account they don't necessarily tell you what the ins and outs are for. It's kind of up to you with your record keeping. You just know that $200 went in yesterday and $40 went out today. That's your fact. So now you kind of deep dive into it, and you want to make sure that you have it categorizing these ins and outs correctly. This is also very vital. So money going into your account isn't necessarily always sales. It can be, the bank gives you your 3 cents of interest income, or, you return an item and they credited back your debit card. So that money's going back into your account. Owner's contribution is, things are a little tight. So you got to throw $1,000 into the bank account to make sure your bills are paid. So these are all different reasons why money's going into your account. In a little bit more detail later on, maybe in another webinar, would be how these different categories fit into the reports that we are creating. So a quick recap of it would be sales would go in your income statement report, which I call a profit and loss, just so we don't get confused. Those are, to me, the same things. The profit and loss and the income statement are synonymous. Interest income would kind of be go under other income. Refund from a returned item would, if the returned item was supplies, then it would go into supplies to offset when you spent the money, you want it to be canceled out. Owner's contribution is an equity balance sheet. So, and it says etc. because there's plenty of different categories.
I think Dorothy may have frozen. Yep. So let me just conclude this. So what she's describing is that there's cash or money that comes in that gets deposited that can represent different things. So if you sold something, maybe you have investments for the company and that interest comes in. You may have a refund that was returned to you, but that refund may have been for something that you bought that you resell. So that's going to be a different type of category. Owner's contribution, I put $1,000 back into the business account because I borrowed it last month. So that's going to be a different type of money coming in, different category. So the outs of the money would be things like your operating expenses that we talked about, making payments, purchasing equipment, which you take it's converting cash in the balance sheet into equipment, not an expense, it's an asset. So this is all having to do with how we name and categorize the different transactions that occur in your business. And so you reconcile the bank statement first, then you go back through and you're going to categorize these expenses so that you can do journal entries and enter them into your computer system. And this is where the bookkeeper and the accountant or your on-site bookkeeper does this to make sure that things get put in the right bucket. Now, there's nothing worse than when you get your financial statement and you look at the profit and loss statement and it says you have a big red negative $10,000. And you're like, how did I lose $10,000? Well, the first thing I do is I go back through every single entry to make sure that it was put into the right place. So if I took a $10,000 payment to pay down equipment for the business, but somehow it got expensed, I have to reverse that entry and get it out of there because it's not an expense. It was a payment on a principal amount on the balance sheet. So categorizing is really important. Understanding what goes in what bucket is really important. So we wanted to drill it down a little bit further so that you would know that you have to start with your bank statements and really take a look at what you're spending your money on line item by line item. In fact, Tom Golisano, who we all know is the Paychecks guy, in his book, Built Not Born, he described how he would get one of those rulers that had a magnifying glass on the top. And he would go through these statements line item by line item to make sure what he's spending money on, where it got captured and categorized, and how it affected the net profit of the business. Didn't matter what business it was, because he's involved in a lot of them, but this was one of his tools that he insisted on using so he didn't miss anything. So at this point, we've given you a lot of terminology. We've talked about process and cycles. We've introduced you to the accounting function. It was not our intent that you walk out of here knowing everything about accounting, but to give you information so you can go to the next step. So what we recommend is that you look at your bank statements, maybe start with the September statement, even for your personal life. Take your personal bank statement and go through each one and categorize. I do this when I'm helping people kind of put their budget back together. They're having some financial difficulty, because you discover things like my daughter did, that she was spending $250 a month at Starbucks. But mom, it was only $4 here and it was $3 there. Yeah, it all added up to $250 a month that you could have been making. You're telling your bank you can't make your car payment, but you've got $250 a month for Starbucks. So by categorizing and looking at where this money's going for your business is going to help you maintain profitability. So reconcile those statements. If you need to work with someone, outsource it. Determine what the categories are going to be for income. Sales, I'm selling my crochet blankets and my quilts and whatever. Define what is income, what is going to be representing income. So if you have investments in the business and you've got interest income coming in from your bank accounts, because you might have a CD on deposit, you might have a lot of money from your business and you invest it. So there's income coming in. It could be interest income. It could be income from sales. Okay. It could be service. So if I'm a plumber and I'm selling a part and then I'm installing it, I've got two different types of category of income there. Understand your balance sheet. That's the snapshot of where you are today. And understand the profit and loss statement, which is also called the income statement. Okay.
I do have a question.
Yeah.
Do you have any good books that you could recommend?
I don't not necessarily think about books, but I will tell you that on YouTube, there are some excellent CPAs and accounting personnel that by topic provide you with some really good information. Books, I would say that the Business Insight, maybe Jennifer has some recommendations. If you go to the catalog and put in accounting or peruse the business department in the library, there are some good books. One that I have used to teach accounting is the Barron's Accounting the Easy Way. In here is explanation. There are exercises to do, and you will be receiving a pretty extensive accounting glossary, which will help you to know what you should be learning. So I do think that books can be very good, but more importantly, we have so many resources with podcasts and YouTube videos and Rumble and different places. Just make sure that the person is a legitimate accounting professional. So I would encourage you to look at all those resources and maybe outline what you need help with. So what did you understand in this presentation? What are some of the things you'd like to learn about? Maybe see if there's an online course, like the Accounting for Dummies series, if there's presentations there. But I got to tell you, there are some excellent YouTubers that are putting that information out in a very comprehensive way for the layperson to really understand these things. So I would encourage you to do all the above. The Barron's books have been very helpful for a lot of my people that I work with on that. And it teaches it in a way that is interesting. But I almost promise you that if you start getting into the numbers and you start realizing where expenses are being spent, you're going to become an expert at knowing how to keep expenses low, how to maximize income, how to buy effectively when you're buying for wholesale or services you're providing. This is going to bring your business to life. The number The numbers never lie. They tell you the story and they help you manage and get your business going in the right direction. And when it's not, and you keep saying, every month I'm looking at this, but every month I'm losing business, get to the SBDC. Let us go through this and analyze and see what's happening. Because what could be happening is that we either need to raise prices or reduce expense or figure out a cheaper way to do things. But either way, your business advisor at the SBDC can certainly help you with that. And we have a lot of good resources here. So with that said, referring back to what we did last month, we talked about these alternative software packages. There is QuickBooks, but there's Wave and Sage, ZipBooks, FreshBooks, accounting. Just as a reminder that there are other accounting packages that you can use. And in the event that you need these resources, you need help, you've got the Business Insight Center and Jennifer and all of her staff and the SBDC. So you can go to nysbdc.org and click on make an appointment if you want to come visit. We basically do telephone or Zoom meetings. And we have some resources like EntreSkills that can help with, some financial pieces. And there's an accounting package and information in there as well in our EntreSkills platform. So with that said, we have to tell you the rest of the story about Marvin. So Marvin, even though he plunged into the water, he came up on a log. The log carried him out to an island in the sea, and he got a job there counting coconuts. So he was fine, but the gardens died, but he has a new job, counting coconuts. And that is the end. Thank you for being with us. If there's any additional questions, we can address those now.
Just have feedback. Thank you. This was informative and useful. Awesome. Thank you. It was a super presentation. And thanks for taking the time to answer all the questions. I don't see any other questions coming through. Yes, can you find the recorded version of this? That will be sent out. And a question, can we go back one slide, please? Okay.
To this one?
Is that the one, Terry? Just waiting. No, yes, that's the one. Perfect. Thanks, Gina.
I didn't think they needed one on Marvin.
Yeah, a lot of great feedback. Appreciate the information provided. Yeah, this was great. This was very, very useful, very helpful, ladies. Thank you.
And Jen, what would you recommend in terms of library resources for accounting?
Well, I'm actually Kate. I'm one of
Oh,
Jen's.
Kate. Sorry.
Hey, no work while here.
I can't see you. Oh, there you are.
Hi, everybody. Jen, I don't know any good resources on accounting. That's not my subject area particularly, but I can certainly have Jen follow up with this. But Gina, anything that you can recommend or people can schedule an appointment with Jen, I could put our email in there in the chat. I could do that now. And someone posted, I'm relieved to know that Marvin is okay. And last, can you quickly show the slide prior to categorizing?
Right here, the bank reconciliation piece.
There you go. And can they set individual appointments for specific accounting issues in our business?
You mean with the SBDC? Yeah, you can bring anything that's a topic to the SBDC. I mean, we handle everything from, how to buy a building to talking about this topic, marketing, social media. We pretty much cover all of it. And if we don't have the resources in our center, again, we have 213 advisors statewide that can help us. And if I need to go outside of New York, I've got 1,057 SBDC centers.
Perfect. And if I buy a QB now, will I still need to pay the subscription?
I don't know the answer to that, but Dorothy might.
Can you hear me now?
Yep.
Yeah, sorry for that. If you buy it, I believe before the end of the month, you can just have it on your desktop and not have to worry about it. I believe in 3 years, they will not support it. But all that means is if you call customer service, they won't help you out. But if you want it to just be a one and done, you can do it if you do it fairly soon.
Great. Thank you, Dorothy.
You're welcome.
So we made it through from my phone ringing to Dorothy's internet connection. I'm glad that you found it useful, and we look forward to seeing another webinar. And, let us know what you think the topic should be. We'd be interested in hearing from you. So thank you very much for attending.
Thank you very much, ladies.
Thank you.
One question snuck in here. Doing this with SEAP, who do I send my form to have it signed that I attended?
Okay. I don't know what the acronym is.
Matthew, can you put in, what is SEAP?
Oh, Self-Employment
SEAP.
Assistance Program. I didn't hear all the letters. Yeah, so the Self-Employment Assistance Program, if you send it to us, we can certainly sign off that you attended, as long as I can know who you are and see you. Oh, Matthew Park, is that you?
That's the one, and he's asking
Okay.
which email.
Well, I'm glad to hear that SEAP is back online. They suspended it during the pandemic. So yeah, and also, Matthew, the Entre Skills program that we have at SBDC is it's an accepted certified training program that you can use for those requirements for training. And it's an excellent package. It's self-directed, it's free. So if you become an SBDC client, we can set you up with Entre Skills, and then there's a certificate at the end of that prints out, and that takes care of all your requirements for training.
Gina, can you put your slide up for your email? He's just asking which email to send it.
Not there. So
No.
you can send it to let me put it in the chat. To Matthew Park. It would be Gianelli at Brockport.edu. Mangiamelli, GMANGIAMELE at Brockport.edu. There you go.
Perfect. Thank you so much.
Okay, anything else?
Going once, going twice. Yeah, thank you, ladies.
Great.
Very,
Thank
very
you, guys.
much.
Appreciate you being here. Kate, thank you. Jen, thank you.
Thank
Sarah,
you.
thank you.